A potential financial crisis looms, and it's time to sound the alarm. The rapid growth of digital currencies, particularly stable coins, has regulators scrambling to keep up and prevent a catastrophic event. In a world where finance is increasingly going digital, the International Monetary Fund, Kristalina Georgieva, urges countries to embrace the reality of fiat money's digital transformation. As crypto assets gain mainstream acceptance, the focus is on stablecoins, which are designed to be stable assets pegged to real-world liquid assets like hard currencies or government securities. But here's where it gets controversial. The largest stablecoin, Tether, has an outstanding balance of $181 billion, and its reserves are largely backed by short-term debt and cash-like instruments. This has raised concerns about their influence and stability. The IMF warns of the potential for a run on stablecoins, which could trigger fire sales of their reserve assets and impact bank deposits and government bond markets. Regulators are anxious to prevent such a scenario, with the U.S. taking the lead by establishing federal stablecoin regulation. However, there's a real risk of regulatory fragmentation, as highlighted by Georgieva and the Financial Stability Board. Their review found significant gaps and inconsistencies in implementing crypto and stablecoin recommendations, creating a messy and fragmented regulatory environment. And this is the part most people miss. While progress is being made in regulating crypto assets, stablecoin legislation is mostly lagging globally. With stablecoin technology evolving rapidly, a light-touch approach to regulation is suggested, but the challenge is to strike the right balance. Ajay Banga, president of the World Bank Group, warns, "We must be very careful when implementing regulation. We don't want to kill it via over-regulation." The analogy to the Hindenburg disaster, where an entire industry was destroyed, is a stark reminder of the potential consequences. As Umar Faruk from JP Morgan points out, even regulated industries like banking experience failures every decade. So, the question remains, can a regulatory framework save the crypto securities market from a similar fate? The debate is open, and we invite you to share your thoughts in the comments. Will stablecoins have their Hindenburg moment? Or can regulation steer them towards a stable future?